The market has dumped hard, but I think I've worked out why. I've spotted something that nobody else is really talking about, and it could explain exactly what has just happened. This isn't about retail panic or some random tweet. It's much bigger. Record-breaking outflows have just hit Bitcoin and Ethereum ETFs. Quietly, behind the headlines, institutions have been pulling money out at historic pace. And when you connect the dots, the picture gets very, very clear. This may be the reason we've seen such violent moves in the charts over the last week. Stick with me, because in this video, I'm going to break down exactly what has just happened, why it matters, and what could come next. And by the way, if you're serious about crypto and you want daily insights just like this, make sure to hit that subscribe button. I'll post every single day, keeping you ahead of the big moves. I am not a financial advisor. This video is based solely on my opinion on what I am personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I am not a financial advisor. Let's start simple, because not everybody fully understands ETFs. An ETF, or an exchange traded fund, is essentially a financial product that allows investors to buy exposure to an asset like Bitcoin or Ethereum without directly holding it. Instead of opening an account on a crypto exchange, setting up a wallet, or dealing with any private keys, an institutional investor can just buy shares of an ETF through their brokerage account. It's basically crypto wrapped in a traditional finance package. Why is this important? Because ETFs are the main bridge between institutional money and crypto markets, pension funds, hedge funds, asset managers. These are the players who move billions with just a few keystrokes. When they buy ETF shares, money flows into Bitcoin or Ethereum. When they sell ETF shares, money flows out. So while retail traders on Binance, Bitfinex, or Coinbase might get all the attention on social media, the truth is that institutions are often the real movers of the market. Now, here is where it gets massive. The past week, we've seen the worst outflows in history for Bitcoin and Ethereum ETFs. Billions have left the market in just a few days. Ethereum's ETFs in particular saw massive redemptions, and Bitcoin wasn't far behind. We're not talking about small exits. This is record-breaking numbers. To put it in perspective, just as ETF inflows earlier this year helped drive Bitcoin to new highs, today's outflows are like the mirror image. They create sell pressure, they drain liquidity, and they spook investors. And here's the part nobody's really talking about. This might actually explain the sudden dump we've just experienced. Everyone was scrambling for a reason on social media to why the market has dumped. Was it macro news? Was it whales playing games? Was it retail panic? But when you line up the timing of those ETF outflows with the sharp drop in price, the correlation is almost impossible to ignore. Institutions were quietly heading for the exit while markets followed. This isn't the first time ETFs have told the real story. Back in 2024, when Bitcoin's ETFs saw massive inflows, prices rallied relentlessly. It was institutional FOMO, and it drove the market far higher than most retail traders expected. Now in 2025, we're seeing the other side of that coin. Outflows on this scale are rare, but when they happen, they often coincide with corrections, consolidations, or even larger pullbacks. The lesson is simple. Watch what the big money is doing. Retail chatter might give you hype, but ETF flows give you the truth. Now let's talk some price action. Bitcoin has fallen sharply from recent highs and it's been testing key support levels. Ethereum has mirrored that move with liquidity sweeps shaking out over leveraged traders. And here's the thing, we warned you about this. Just last weekend, I said on a video on here and on TikTok that if Bitcoin lost certain support zones, a flush was very possible. And that's exactly what we've just seen. It wasn't random. It wasn't bad luck. It was structure breaking down under the weight of institutional exits. Liquidations across the futures market piled onto that pain, creating those violent wicks that stopped out thousands of traders. You know how it goes. One cascade triggers another. But once again, If you were paying attention, this was not a surprise. So what happens from here on in? Well, we have two main scenarios. Let's look at scenario one. This could be the start of a deeper correction. If institutions keep pulling money out of the ETFs, then price will struggle to recover in the short term. Support levels could continue to get tested, and we might be in for more downside and more volatility. But scenario two, this is a shakeout. Institutions may be taking profits after a massive run up, while retail all panics, and you just got to look at social media. People are panicking. But once all those weak hands are gone and they're out, the same institutions could reload at cheaper prices. This is setting the stage for the next leg higher. Both outcomes are possible. What matters is the risk management that we take. Inside the Wolfpack, we've been using the Howl Line indicator to track these moves. For those that don't know, the Howl Line is our custom indicator from the Wolfpack. You can get it if you go to milkshakematty.com and look for the Howl Line indicator. Go and click on that button. And it's been incredibly accurate at highlighting stop and restart zones. In fact, one of the key crossovers gives us an early warning that momentum was fading before this dump. You have to know which timeline to look on, but it's there. And if you combine that with ETF flow data, liquidation heat maps, and the sentiment tools like the Fear and Greed Index, you start to see the full picture. This is why having the right tools and the right community matters. While others are confused and panicking and chasing the headlines, we are already preparing for the possibility of this kind of move. Here's the big takeaway. Outflows are scary in the short term, but they don't change the long-term thesis. Institutional money leaving today doesn't mean they'll never come back. In fact, history shows us that they usually do. They sell high, then they reload lower, and they ride the next wave up. If you zoom out, Bitcoin and Ethereum remain in strong macro trends. Adoption is growing, infrastructure is expanding, and long-term holders are still accumulating. I am accumulating this week. So yes, expect volatility, expect pain for over-leveraged traders, but don't lose sight of the bigger picture. So to wrap it up, Bitcoin and Ethereum ETFs have just seen their biggest outflows in history. This may well explain why the market dumped so violently. In the short term, volatility is likely to continue, in my opinion. So you have to be careful. But long term, this could be nothing more than a shakeout before the next rally up. And remember, we did warn you about this. If you want to be ahead of these moves, not behind them, then you need to be part of a community that sees the whole picture. That's what we do inside of the Wolfpack. You can join it by going to milkshakematty.com, clicking on the Wolfpack, or there'll be a link in the description of this video. We share daily trade signals. We run live streams every single day, have on-demand training courses, and don't forget to spin that Wheel of Fortune because we've got some insane prizes for our members. Most importantly, we trade smarter and together as a team. Our community is amazing. If you're looking for a group to feel at home with, go check it out. And if you're looking for a reliable exchange to start trading with, check out Bitchinix. You can sign up using my link in the description. KYC is optional and you can literally just sign up with an email. There's also up to $10,000 of new account bonuses available. So go and check it out. Link in the description. Finally, if you've reached it this far and you're not subscribed, please hit that subscribe button. 58% of you that watch my videos are not subscribed to me, and you'd be helping me out massively. And also, you're going to get daily videos of exactly the kind of content that you want. And also, drop me a comment. Let me know exactly what you're thinking about this week and the dips, about the ETF outflows. And also, let me know whereabouts you're from. I appreciate every single one of you for making it this far in the video. Remember, the strength of the wolf is in the pack, and I'll be seeing you on the next video.